Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com. This podcast is also brought to you by Valley Transportation. Valley has over 33 years in the trucking business, moving ag and construction equipment across the country. For more information, go to valleytransportation.com or give Parker a call at 800-657-4910. At Valley Transportation, our goal is to help you reach yours.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Also, if you're looking for a great place to help your salespeople close big deals and just get the sales process done quicker and easier, check out Arrow at heyarrow.com. Shawn is with Hackett Financial out of Boca Raton, Florida. And Shawn, I don't know if you're going to get the 8 inches of snow that I'm going to get here this week, but I'm sure the weather down there is quite delightful and not.
We're going to get a plethora of vitamin D.
I bet you are. I'm sure you are. Yeah, we're supposed to get that winter blast supposed to come through here starting today, actually. Today through middle of the day tomorrow, I guess, and we could have up to 8 inches. So either we're going to get a skiff or 5 feet, one of the two, usually.
Right, it won't be what they tell us. It'll be either nothing or way more than they thought.
When they send out warnings, that's usually like, well, we're going to get a couple inches. It's when they don't send out the warning that we get a feet. We're measuring in feet. So
yeah.
All right. So today is a report day. Got a December report coming out, and typically not a big deal, but this year could be a little different, I guess. So I guess you take a look what's going on with last week's trade and all the news coming out of the Fed with the up and down, and we're going to raise rates and tapering is going to have to start increasing, and how that fluctuated with the markets and everything else. We saw a pretty rough week last week, and this week's been kind of mixed. So I guess as you look around with this report, I guess what's your thoughts there?
I'm going to stick to the idea that I don't think they're going to try to rock the boat too much in this report. I think they're going to get to the January report when they put their final stamp on everything, and I think they'll make their adjustments there. Doesn't mean they can't do it here, but the history is they tend not to, and so I'm just going to stick with the idea that they'll make some small adjustments, but nothing that's going to really change the market's view. So for example, soybean exports continue to fall behind what they're expecting. So at some point, they're going to have to lower exports for soybeans and increase ending stocks. Are they going to do that today? Probably not. I think they would wait until January to do that. It's just the way they tend to like to do things. And with South America, are they really going to make big adjustments? It's too early yet, Casey. The big weather, January, February, March, that's when the yields are really determined on a lot of different things. It's just too early for them to make any major changes to their current. They could, tweak it left or right. So I'm not anticipating anything. I mean, of course, they can surprise, but I don't think so.
As you take a look around, yesterday had some rulings come out from the EPA on renewable fuel credits.
Yeah.
And kind of had that come out, and that kind of shook the market up a little bit. I guess you take a look at that. What's your thoughts on that as you look at ethanol?
As long as gasoline demand is good, and as long as margins for ethanol plants are good, which they are. We're going to continue to produce a lot of ethanol. I mean, it's. I've always felt, in the early days, it was all about subsidies keeping the industry going because they couldn't support themselves. Now, there's times they lose a lot of money. There's times they make a lot of money. Right now, they're making a fortune. If they've done their job right, Casey, if the ethanol plants have done their job right, they should have locked in all their corn for the year, locked in all their ethanol prices for the year, have a historic margin, and just take the year off and keep making ethanol. I mean, that's really what they have the ability to do right now. So I don't see any problem with corn demand from ethanol for this year. Maybe next year will be a problem, but if they play their cards right, they really should have a profitable year, and there shouldn't really be an issue, even if, we had this big break in crude oil, right? Casey, we had a big break. And really, we didn't see a big break in corn because I believe the market understands it's done already. The ethanol guys, they're not waiting around. They're getting all the corn locked in, and they've locked the margin in, so we're going to have good ethanol production all year long. Now, like I said, they may overproduce at some point if we have problems with the economy, if this virus has more issues. Maybe it's a problem for 2023, but it's not a problem for 2022. So I don't think those policies, which are longer term in nature, really going to have an impact on near term price. So,
Yep. All right. So you've got, let's talk about South America for a little bit. You got Brazil. They are, they're raising their expectations, even though with the stuff that's going on there. As you take a look at Brazil, what are your thoughts there as far as kind of where we're at now as a kind of a state of the union, I guess, of conditions there?
The state of Brazil. The state of Brazil is.
I mean, that's a whole nother podcast in itself.
Brazil's future has never been more murky. I'm just kidding. Well, look, they've had a much better first part of the growing season this year than they did last year. There's no question about it. Overall, conditions are in better shape, but the crops aren't done yet. We still have to get through pod filling and soybeans. We still have to get through first crop corn pollination, which we haven't done yet. There is a lot of dry weather in South Brazil, Rio Grande do Sul. That's starting to take some bushels off. But remember, first crop corn is the smaller crop. So right now they're looking at potentially 20 or 30% declines in Rio Grande do Sul. But when you equate that to the entire corn production of first crop plus second crop, it amounts to 1 million metric tons out of 110 expected production. So it's not it's not material at this point. It would have to become a larger issue, especially going into second crop corn. Soybeans, things look good. They're drying out. There's some worries. But it's just really too early. I think it's too early for them to say things are that good. I don't think one can really I think the only claim one can absolutely say is that we have much better productive potential this year than we did last year, but we're not far enough along yet. And if this drying out pattern that has started to develop already intensifies in January and February, especially with this sudden stratospheric warming event we talked about, maybe accelerating that, we could be looking at crop production coming down, and usually, that tends to have an elevation on prices at some point. We're thinking mid-January onward could be when the market might have to reprice lower production out of Brazil, but we think for now they're going to go with the idea things are fine, nothing to worry about right now, and what the Brazilian government's saying isn't going to change that. So,
yeah. All right, let's jump over and take a look at what's going on in the box beef market. Man, I tell you what, they've been getting hammered here of late, and obviously it's seasonal time of the year for those kind of things to happen, but man, they're really just getting their head ripped off right now. So I guess as you take a look at that market, what are your thoughts there?
Yeah, I mean, there is a seasonal tendency. I kind of feel not just with beef, but pork, and I think with a lot of things, it was a lot of panic buying, front end buying, excessive buying early to make sure that they had enough for the holidays, that they didn't, I think there was a big worry that we'd have empty shelves at the stores and not enough food and not enough toys and not enough this and that. And so I think there's going to be a little bit of a hangover where we overbought. Okay, we have enough, and then everybody says we got to work off the inventory. And I think that, maybe the box beef coming down is saying we bought, more beef than we probably should because we were worried about having enough. But now that we know we have enough, we're going to work off the inventory, and that means we walk away from the cash market for a little while. I think that's something we may see in market after market after market start to happen because there was so much fear, a month or two ago that, supply logistics and we're not going to get enough, product and we're going to have shortages. And so everyone kind of, did what they would do in such an event. They made sure they didn't run out. And so I think that's going to be one of the reasons we're a little worried about markets here, going to January is we might have to eat some weak cash markets here for, going into that mid-January time frame. So,
All right, let's jump over and talk about what's going on in the soft markets a little bit. Right now, it's been, I don't know, how long has it been now? About a month since you went to Brazil and took your coffee tour. What's the kind of the state of the market with coffee right now?
Well, remember when we were on the ground there, Casey, coffee was around $1.98, $2, give or take. So we've had a 20% move since we were there. We've gone from 2 to 240, 250. We had a pretty sizable move. 250. If you look at a long-term chart going back to 1970, is coffee really it's pretty rare territory to go above 250. And so we went right to it, Casey, 250, 250, and now we're kind of backing off and kind of doing some consolidation, which you would expect to see. Some crop tours are going to come in. I know a lot of the trading houses are kind of upside down in this market because they've been bearish for a long time and they were short for a long time and got themselves in the wrong spot. I kind of feel that they're going to try to portray the crop being larger. Saying, they see a lot of more cherries than they thought, or I just, I have a feeling they're going to try to create some bearish news out of these crop tours to try to knock the coffee market down a little bit, to try to get themselves out of the situation that they're in. This is our speculation. It's just wild speculation. We've been following the coffee market for decades, and we just know that there might be those in the trade that might over amplify the truth on the ground. We were there, and a lot of these outfits, Casey, were saying, the rains were great, crop looks phenomenal, and we were on the ground there, and it wasn't there, So,
right.
So my feeling is that one has to be a little careful that maybe there could be a quick takedown here on coffee prices after getting to 250 before the market kind of regenerates itself and gets back to the truth again and then can go higher. So for right now, I think we'd be a little cautious here on coffee and let this market play itself out, let these estimates come out. And if we're correct that they're going to try to portray them being larger than expected, there could be a buying opportunity, late in the year, early January on some of these larger forecasts, which, by the way, we don't believe that's correct, but we just think that's what we think that could happen. That's just, we always have to think about all the players in the market, what their bias is and what they're going to try to accomplish. And, no one can say they're right or wrong because that's the market, right? You can throw anything out there you want. The USDA can say anything they want. We don't have to agree or disagree, but the market can react short term to it. So,
right. Exactly right. Okay, let's talk about cotton for just a second. Cotton has had a historic run, and right now we're looking at cotton about $105, $1.05 a pound, and that's a pretty significant bounce from where we were at when we talked about it last week. Last week it was, I want to say it was up there like $1.12, $1.15 for a minute, something like that, $1.20 in that range. So as you take a look at what's kind of going on there with cotton, I mean, is that the kind of some of that hangover talk that you're kind of talked about here and some other stuff?
Yeah, a lot of overbuying in cotton. A lot of retailers wanting to make sure they didn't have empty shelves were closed during the holidays and such. And so, Chinese demand was crazy. Boy, I don't know, Casey. I just don't see cotton demand holding up here. I just don't see it. I think the economy all this inflation is causing a slowdown. China, Evergrande, real estate. I don't know. I don't see cotton demand holding up, and if you look at those deferred prices for December 22, very attractive for planting cotton in the U.S. I mean, very attractive, and very attractive planting them everywhere. So, market's got to be careful. I want to go down too low so that it doesn't keep the farmer wanting to plant cotton. But in our view, we're nowhere near a level that the cotton farmer's going to decide he doesn't want to plant cotton. So,
right.
Can there be bounces? Of course, anything can happen short term. But we're just feeling we made a major top. We think we made a major top at 118, 120. We think, that could be it for a while, like, several years or more kind of thing. I think we really overdid it because of this overbuying, this fear over not having enough for holiday purchases and such forth and so on. And I just don't see it holding up unless we have a major weather problem developing, in 2022. And maybe we do, but that's a long way from where we are today. So for now, if I'm a farmer, I sure do want to be making sure I lock in somehow, some way these prices. You just can't let these prices leave you in the dust. You just don't. You have to. You have an opportunity as a cotton farmer to lock in a great margin out for quite some time. Merry Christmas. Go ahead and do it.
Right. Right on. All right, milk. Milk has had a wild ride, man. I'll tell you what, it's been it's 1866 right now is where it's trading at right now as of this moment in time. But I mean, last week we were up almost to mid to high 19s. We really saw some big movement in milk, and here over the last week or so, it's just been it's been slowly kind of making its way kind of down a little bit. So I guess you take a look at milk. What are your thoughts? So I mean, we had that report come out that in one of the bills that they were going to add, whatever it was 14 million pounds or 16 million pounds of cheese or something like that the government was going to buy as part of one of those packages. So I guess as you look at milk now, I mean, what's your thoughts there?
I think you have to remember how we got to where we're at. First of all, we had the food box program during the pandemic that goosed the market over 20 and got production rocking and rolling. I mean, we were growing production in excess of 4%, 5%. And we oversupplied. So then we had the big break from the spring into the summer. Terrible prices, losing tons of money. Then the feed price took off. So we went from the best of times to the worst of times, right?
Yeah.
Like that book, the best of times is the worst of times. And so now production is under the gun. We have flat to negative production here. New Zealand has negative production during their big production part of the season. We have Europe flat to negative production. So when you have negative production and you have a rebound in demand, you're going to have prices start to reflect that. And now farmers are making good money again. So, but there is a lot of demand that comes in around the holidays, just like for beef, just like for pork. I do think there's a lot of front-end loading for a lot of this stuff as well. And there's a strong seasonal pattern of tops in December and big knockdowns in January, February. Not every year, but the only time that first quarter prices have been higher than they are now was the 2014 all-time high top that we made when China had that scandal with milk contamination, if you remember. Other than that, this is the highest we've been, and I just don't think we're going to go out right now and test that high. We think we've done enough. We had a kind of an ugly reversal yesterday. I don't want to get too micromanaging, but we had a really ugly reversal intraday yesterday, back down on class 3. Almost looks like we might have made an exhaustion top yesterday, and maybe that's the seasonal top, and maybe the market's going to start to work its way down. We certainly would be looking at, for dairy producers, they have opportunities to do what's called DRP, where they can a subsidized protective floor under the market that the government offers. We certainly would be thinking about putting some DRP protection under the market here in the first quarter and the second quarter. Very good prices. We're bullish longer term, don't get me wrong, but I don't think you want to leave, just a couple of months back when we turned bullish this market, we were 15, 16. So got to reward it. Once again, Merry Christmas, the dairy farmers. So.
Right on. Okay, last but not least, I want to hit sugar here a little bit just because of the time of year that we're in, with beet harvest being all the way done, and for the most part, sugar production is in full swing in pretty much the 5 key areas in the United States. So I guess right now it seems like sugar it's staying right around 20 cents. It's not really moving one way or the other. You'll see it go down for a little bit and bounce back up over it, but 20 seems to be where it wants to stay. Is that I guess, what is it with 20 cents that sugar likes so much?
Well, I think the new supply that's coming out from Asia is a whack-a-mole when the market tries to get to 20, saying there's plenty of supply overhead.
Yeah.
But you start knocking it down to 18, strong buying for ethanol underneath.
Yeah.
And so I think we're in a balance. We're in a balance right now, and I think the market's uncomfortable really knocking this market down until it's comfortable that the next production out of Brazil is going to be larger.
Gotcha.
And even though weather has been better than last year, if you actually look at the weather maps where they grow sugar in central to northern Sao Paulo, just south of Minas Gerais, been kind of dry. It's been drying out. We've been talking about this drying out pattern, but really where they grow the sugar, it's been really getting kind of dry. And so, that's making the market a little uncomfortable. I think if we had some better rains here over the last 3 days, I think the market could have broken down more severely. But I think it's saying, we just better make sure that the number one exporter in the world of sugar delivers, and they haven't from now until March cutting to make that decision. I just think they're willing to keep the market in this range until it can. I mean, they know Asian production's good, but it's not so good that it can overcome a second year of poor production out of Brazil. So I think we're stuck here until the market makes that decision. If it decides crop's good, we break down. If it decides crop's not good enough, we probably break up. I think we're in that zone right now. And at this point, too early to tell, but if we're correct about further drying out from the sun-stratospheric warming event in Jan, Feb, and March, sugar could be a market that might wake up to the upside if that verifies here. So that's something to pay attention to from, I would say, like grains, mid-January onward could be a very important time for the sugar market to make its decision how it's going to resolve this impasse.
Yep, right on. Well, Shawn, good stuff as usual. Folks want to reach out to you and get more information about what it is you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Lots of information on our natural climate cycle algorithm, our capital flows, lots of things on there about how we do what we do to see if we might be of help and some value to your listeners.
Right on. Well, I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also go to MovingIronLLC.com for everything Moving Iron related. Shawn, appreciate you being on the podcast, man.
Thank you, Casey. Always a pleasure, and look forward to doing it next week.
Yeah, me too. So with that, I am Casey Seymour, Shawn Hackett. Let's move some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to axontire.com. This podcast is also brought to you by Valley Transportation. Valley has over 33 years in the trucking business, moving ag and construction equipment across the country. For more information, go to valleytransportation.com or give Parker a call at 800-657 4910. At Valley Transportation, our goal is to help you reach yours.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here.